Hey everyone, and welcome back to the channel. Today we're talking about something that might sound a little intimidating, but is super important for your family's future: estate taxes. Specifically, we're diving into some smart strategies for 2025 that could help you protect a significant amount of your hard-earned wealth for your heirs. With some big changes on the horizon, now is the perfect time to get informed. So, what's all the buzz about 2025? Well, the current federal estate tax exemption is historically high. In 2024, an individual can pass on about $13.61 million tax-free. But here's the catch. This high exemption is set to expire at the end of 2025. If Congress does not act, it's scheduled to drop back down to around $6 or $7 million, adjusted for inflation. That's a huge difference, and it means that many more families could suddenly find themselves facing a hefty federal estate tax bill, which can be as high as 40%. This is where the unified credit comes into play. Think of it as a lifetime voucher that you can use against either gift taxes during your life or estate taxes after you pass away. The current high amount gives you a golden opportunity. You can make substantial gifts now, using up this large exemption without having to worry about paying gift tax. This is what financial advisors call a use-it-or-lose-it situation. By gifting assets now, you effectively lock in the higher exemption amount, even if it decreases later. Now, let's talk about one of the most powerful tools in estate planning, especially for married couples: the unlimited marital deduction. This rule is pretty straightforward. It allows you to transfer an unlimited amount of assets to your U.S. citizen spouse, either during your lifetime or at death, completely free of any federal estate or gift tax. This is a fantastic way to defer taxes. When the first spouse passes away, everything can go to the surviving spouse tax-free. The estate tax then becomes a consideration only after the second spouse passes away. It's a simple yet incredibly effective way to ensure your spouse is provided for without an immediate tax burden. But what if you want to start moving assets to your children or other heirs now, to take advantage of that high exemption before it potentially drops? This brings us to gifting. Each year you can give a certain amount to as many people as you want without dipping into your lifetime exemption or paying gift tax. This is called the annual gift tax exclusion. For 2024, that amount is $18,000 per person. So if you and your spouse both decide to gift to your two children, you could give them a total of $72,000 this year, completely tax-free. Over several years, this strategy can significantly reduce the size of your taxable estate. For larger assets or more complex situations, many people turn to irrevocable trusts. When you transfer assets into an irrevocable trust, you're essentially removing them from your estate for tax purposes. This means they won't be subject to estate tax when you pass away. A popular type is the Spousal Lifetime Access Trust, or SLAT. With a SLAT, you can make a large gift to a trust for the benefit of your spouse. This uses up your lifetime exemption, but your spouse can still access the funds if needed. It's a way to have your cake and eat it too. You remove the assets from your estate, but the family still has a safety net. Another powerful tool is the Grantor Retained Annuity Trust, or GRATE. With a GRAT, you place assets into a trust and receive a fixed payment or annuity back for a set number of years. At the end of the term, any appreciation in the assets passes to your beneficiaries, usually tax-free. This is an excellent strategy for high-growth assets, like stocks or real estate, in a low-interest rate environment. The main takeaway here is that the window of opportunity to take advantage of the current high estate tax exemption is closing. Planning now can save your family a substantial amount of money down the road. Whether it's through simple annual gifting, using the marital deduction, or setting up a more sophisticated trust, there are strategies available for everyone. Of course, estate planning is complex and the rules can change. It's always a good idea to consult with a qualified financial advisor and an estate planning attorney to create a plan that is tailored to your specific situation. I hope this breakdown gives you a clearer picture of your options. Don't wait until the end of 2025 to start thinking about this. The time to plan is now. Thanks so much for watching. If you found this video helpful, please hit that like button and subscribe for more financial insights. See you in the next one.